Inflation has come in hotter than expected, while the jobs market appears to be cooling. Ben Udy is the lead economist at Oxford Economics and is standing by for us. Ben Udy, I'll bring you in here. Will this number keep the RBA on the sidelines next week?
Yeah, I think a rate hold by the RBA is all but guaranteed at this point. This hotter than expected inflation print is the final nail in the coffin of any hopes for a November rate cut.
Well, on Monday night, the RBA governor dismissed warnings of rising unemployment. Of course, we saw the September read on the unemployment rate jump to 4.5%, saying the labour market won't fall off a cliff. But with a rate rising to that level quite quickly, could it?
The hotter than expected unemployment rate, or the higher than expected unemployment rate, does create a bit of a tricky situation for the bank. They're having to balance this hotter inflation along with the higher unemployment rate. But taken together, I think the bank's pretty willing to look through the faster rate in unemployment. We've had a lot of bumps in monthly unemployment rate, and so it is important to wait for a couple of prints before reading too much into that. For what it's worth, we're expecting the unemployment rate to remain, higher than the bank has previously forecast, remain around 4.5%. And we think that over time, inflation will creep back down, and that'll eventually convince the RBA to cut rates.
Yeah, it is a bit of a balancing act the RBA has to factor in. I mean, if we look at the RBA's forecast for inflation heading into the end of the year, the underlying forecast is 2.6. We're at 2.8. The headline forecast is for 3. We're at 3.2. I mean, this is problematic for the RBA, isn't it?
For sure. Those year-end forecasts are done and dusted at this point. We're very unlikely to see inflation rates around those levels. The RBA is going to be putting out new forecasts next week, and those new forecasts will reflect today's data, and we would expect them to show a higher rate of inflation because of this hot print today.
Now, Ben, this data has literally printed 5 minutes ago, and you've been talking to me. Have you had any chance to see what has been behind this hotter than expected reading?
I haven't had a chance to dig into the detail as much as I'd like, but we know that part of the strength in today's data is from the electricity subsidies coming off. But the thing that's going to worry, the RBA is pretty willing to look through those temporary effects. The thing the RBA is going to be a lot more focused on is how sticky services inflation is, or if there's been any re-acceleration in services inflation. So when I dig into the data after this call, I'll be looking at that in particular.
Yeah, absolutely. And I mean, just for people who are watching, I mean, the economy is sort of grinding along. We're growing at about 1.8%. It doesn't feel like it's boom times out there. I think many people would like an interest rate cut. What is your sense about how the economy is performing, especially given the unemployment rate is starting to tick higher?
Yeah, the economy is struggling along. It is making its way through and sort of getting through a lot of the headwinds that it is facing. But it is struggling, and we do think more support is needed. We're expecting the unemployment rate to remain around its current level, which is higher than the RBA would probably like to see it. And we're expecting inflation to come down over time as the impact of some of these temporary measures comes off and inflation starts to cool, and we get to see some cooling from the impact of the trade war, meaning that there are more cheap goods from China coming into Australia. All of that's going to help bring down inflation in Australia. And that is going to give the RBA room to cut rates next year. So we're expecting 2 more rate cuts from here.
Okay, and let's put some clarity around that, because I know a lot of people with big mortgages are really hopeful. Maybe not the people who have savings, but when would we see those rate cuts? Is it early next year? Is it the middle of next year?
Yeah, we were hoping that cooler inflation would allow the bank to cut once this year. But given how hot today's readings have been, we think both November and December meetings are going to be out for the bank. Most likely, I would say we'll see a cut in February next year and in May.
And is there a risk, if we see the next unemployment print jump again, that we could then get a December rate cut?
If there was a really material increase in the unemployment rate in December, and there was evidence that was going to be a permanent sort of shift in the labour market, and along with that, we saw some cooling in the monthly inflation data, that could potentially set the stage for a December rate cut. But it's a big bow to draw.
And I just want to make one final point, Ben Udy. We often talk about rate cuts as though they're a good thing, but they're normally a signal that the economy is doing quite badly. So could we take some heart in the fact that the RBA hasn't had to cut dramatically like we have seen in the likes of New Zealand and Canada?
Yeah, I think Michelle Bullock talking the other day was reflecting pretty well on the RBA's performance over the last few years. The RBA never tightened rates as fast as a lot of other central banks. And the flip side of that is they're now not having to cut as quickly. And hopefully we don't see the economy go crashing off a cliff, and the RBA has room to gradually reduce interest rates and come in for a pretty soft landing.